The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to start out the show today like we usually do, looking at the German DAX. And as you can see here, we have come down and tested the 78% retracement of the low 3 days ago. So that's going to be an interesting number to watch to see if it'll do that. You'll notice that we've been up in this area for well over 4 weeks right now. And I think the best thing to do is to go to this long-term chart that we've seen here yesterday. That comes from our good friend Mr. AS over in the UK, and it basically shows the DAX monthly chart. But if you'll take examine it just a little bit, if you'll see the high that we made back in 2015 and the secondary high that happened in July of 2015 and where we are right now, folks, that's a 135 pattern. That's where you have the lower highs coming in at Fibonacci ratios. I did a webinar on this last month that was very, very successful. Boy, we've had some really nice trades in there. There's a couple of small losses, but boy, there's been some pretty nice winners on this thing because it forces you to trade with the trend. Regarding that, when I was in California visiting, I went over to see my good friend Jim Twentyman, and we shared a lot of ideas and stuff, and he reminded me of a system that someone gave us years ago, and I am going to do that as a special webinar probably sometime in December or January. This is really an awesome little pattern. It's a combination of some astro stuff, but it's really easy to use. It's pretty active. And it has a better than 80% probability of winning. I mean, it's impossible to computerize, but it's just really a very good little system to look at. So we'll take a look at that and see how things are going to be lining up with that a little bit later. But anyway, the DAX does look like it's ready to break because we couldn't break above those highs for 4 weeks given the euphoria that we've had here in the United States. We didn't see any of that in Hong Kong or Asia or any other place. We did a little bit in Japan, but it since gave up a little bit of that. So there's not a whole lot of massive buying across ETFs and other things across the rest of the world either. So we'll see how much this rally is going to extend to. Now, one thing I do know for sure, and that is that Isaac Newton was one pretty smart dude. That much I'm 100% sure of. I don't think anybody would dispute that. In fact, what's his name? Mr. Einstein said that there was, he was one of the 5 smartest people that ever inhabited the earth. And the reporter asked him, say, well, who were the other 4? He said, there was Galileo, Pythagoras, and me. So anyway, that's the story of Mr. Einstein. Anyway, let's take a look here at the long-term picture here going over the last year and a half in this index that we call the IWM, which is the Russell Small Cap. Yesterday, we made a 1.618 expansion off of that pattern known as the 1, 2, 3, 4, 5 expanding triangle pattern. So we did make a new high. We went up to the 1.12, which is also an important number when you're looking at the squaring of a circle, but we did hit the exact 1.618 level. We also hit that 1.618 level in the Dow Jones Industrial Average. We missed it by quite a bit because we did not even make a new high in the NASDAQ 100 composite. We did in the larger composite, but not in the 100, which is the larger one that has all the expensive stocks like Facebook and Apple and Google and all the others. So that's what we want to be, focusing on. Now, one of the things that we talked about the other day is the euro and what it was doing. And this is one of the things I focused in the newsletter is the fact that the euro it has been so very bearish. And what you want to do is to try to find out, what's happened in the past because the market does the same thing over and over again. I mean, it never does anything different, really. It'll do it differently for a short period of time, and then it'll go back doing the same thing. It can only do three things. The markets can either go up, down, or sideways. And as you can see, this one is certainly down. If you'll notice, on the 17th of November, we had a nice rally of about almost 100 pips. And what did we do between the 19th and yesterday, the 21st? Over that 2-day period, we rallied almost exactly 100 pips, and now we're making new lows because we mentioned before that this euro has a tremendous bias to the downside, folks. All you have to do is to just take a look at this particular pattern that we're seeing here in the euro, and it looks like it's got 102 written all over it. And here again, you're going to be seeing, if you see this this line here, this black line, that's equal to the last move that we had down between August and December, and it's also equal to the up move that we had between February and August. So the market's repeating in the euro just over and over again. So that's the best thing to trade, folks. If you want to make a living and you want to be bored, trading the euro is the way to go. Believe me, it is. It's not foolproof, but boy, it sure follows patterns, really, really nicely. So you want to watch this very, very closely. Now, on the long-term picture on the dollar, we talked about this yesterday. This was a chart furnished to us by our good friend Jim Bartolioni. And as you can see here, we're breaking up into this area where we're going to get up to probably this 105 level, which is the 61% retracement of the move. Actually, the 61% retracement of the move comes in at 101.70, and I think we're above that right now, or very, very close to it. But the 1.618 expansion will come in at about 104. So this market, because it's accelerating, tells us that it most probably want to go down, go higher in the dollar, i.e. lower in the euro. The euro looks like it's got 102 to par written all over. We've been talking about that for a very long time. That was one of the reasons why I focused on the euro in the newsletter this week, is because it had such a very nice pattern. Now you can see this same pattern. This is exactly the same pattern that we see in the euro with the Nike. And as you can see, Nike had the same type of pattern. So what you'd be looking for is an equal rally in Nike that would take it up to another 10% from where we are right now, up to about 55, and then it most probably go down and make new lows again. But this is the same pattern. It's a 3 drive to a bottom pattern that we see quite often, but you need symmetry and you need ratios, and both the euro and the Nike did the same thing. So that's been, frankly, I think Nike has bigger problems than they want to realize, because I used to buy New Balance shoes. I know that's not Nike, because Nike has expensive shoes, but I used to pay $120 for the sneakers at New Balance because they fit so nicely. And then one of my students from Pennsylvania told me to try Skechers. And so I went online and I found them on Amazon, and I tried Skechers at 1/5 the price of the New Balance, and they're 10 times the shoe of the New Balance at 1/5 the price. So if you're looking at sneakers, take a look at Skechers, because it's a quality product, far better than anything I've seen yet. So as soon as I get my check from Skechers, I'll let you know. Live every day in an attitude of gratitude, and stay tuned for more.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, a couple hours ago, I was, just starting the day, getting ready, and I happened to look at what was happening to the dollar, the fact that we'd rolled over on that euro from the exact number that it should have, in other words, an equal cycle. That told me that the euro was weakening, i.e. the dollar was strengthening, which is usually negative to gold. So when you looked at the gold market, you could see that it was ready to break the 78% retracement level, which would be extremely bearish because you're in a downtrend without any doubt, and you've had lower tops and lower bottoms. So once it broke that level, it had a high probability of moving to the downside. This next chart that I'm going to post to show you the level that it hit, which was the 1.618 expansion of that move between the 18th and the 22nd, right at the 1188 level. Now, if we go below 1188, folks, we're down over $20. So you're talking about a move that is going to probably go down and challenge the 1154 level, and that's only $30 away. We could actually hit that today if something really crazy happening, but we should have a bottom here in the gold here at the 1188 level. Now we're making new lows in treasury bonds again, which is sort of surprising to me, but I get surprised quite a bit. But we're not seeing that same thing in the German Bund. The German Bund is still holding strong, and actually rates in Germany are actually going down a little bit compared to what's happening to us. But we're having a total collapse here in these bonds and notes, which they've been doing. And as you can see, the people are still clamoring for yield. They're still going into the high-grade bonds, which I think is a really foolish thing to do. So we'll see if that's going to be the case or not. Now, I've also posted in here this long-term Dow chart, the long-term monthly chart on the Dow. Let's put that up here again so that you can see it, because I think it's a very important chart for a whole lot of reasons that we've discussed before. and I've also discussed them in the news level. That 1905 was the hold on one second, because the markets are opening in some of these things, and they're trying to tell me, oh, the DAX is now breaking below the 78% retracement level, telling me that, you know, most probably we're going to have a little bit more of a correction there in the German DAX. So just give me 1 second so I can turn that beeper off. Yes, it's breaking badly now, and we're approaching yesterday's lows. So that's another spot that'll probably give it a little bit of support potentially, and that's really neither here nor there. So we'll watch that as we go through right now. Someone's asked if there's any support here in the euro, folks. I really don't see it. I mean, just have to look to see what the last move down was, and that'll tell you what you want to do. It'll go to a 1.27 or 1.618 expansion, and that'll tell you what you want to do. But look what's happening to the dollar yen, folks. You know, we're up 140 just in the last 2 hours. So, you know, something big is happening out there. I don't know if it's, you know, huge or not, but, you know, it's going to be pretty large no matter what happens. Just keep an eye on it, because you know, these currencies are where these money markets move first, and that's one of the things that you want to you know, to sort of keep in mind as you look at some of these things. So anyway, that's we have some support here at 152 in the bonds. The other markets, you know, the like I mentioned, the German bond and the utilities is still looking good. At the 61% retracement, but again, I'm just looking for a rally here in the bonds and notes, because, you know, they've already raised rates. I mean, what the Federal Reserve does December makes no difference, because rates have been going up since July. All you have to do is just look at the chart, and you can see that's what's been happening. So sort of pay attention to that, because it'll give you an idea of you know, where you are. You know, in the context of what interest rates are really doing. The other thing that I've mentioned before here is the fact that we've been looking at this market as far as its breadth of the market, and it has been deteriorating, and it's still deteriorating. Even yesterday, with the Dow making another run, and the Russell broke a 21-year record yesterday, folks. The Russell was up 13 days in a row. It hasn't done that for 21 years. And that's also 13 is one of the magic numbers that Tom DeMark uses in his sequential system. In other words, he counts the number of new highs, and 13, of course, is an outlier number for him. In other words, it happens to be a Fibonacci number, but he believes that the markets run in moves of 13, 8, 5, 8, and 13, and 13 is the far out month. Well, we've seen markets go to 21 or 22 days in a row. I've seen it in silver and sugar, you know, over the years, but that's neither here nor there. But his system is based on that. So, and this is how markets end, folks. When you see that move that we just saw in the Russell that I posted earlier, that's not the start of a move. That's the end of a move. So just, you know, because that's what Isaac Newton said. You know, for every action, there's an equal and opposite reaction. That was rule number 2, and rule number 1 was you know, what goes up must come down. That's his law of gravity, and no one's in the markets have ever been able to defy that one. They've tried it. Sometimes it lasts 30, 35 years, like we've had in bonds and notes. We had a 25-year bear market in gold, but they do bounce back. So remember, any market that can give you 1,000 points has the ability to take it away from you. So pay attention to that, you know, as we go through. I wanted to bring this up to you just to show you we were talking about this 135 pattern that we were watching here, and this happens to be the wheat market, and I just wanted to give you an idea of what it's looking at. We're looking at here. Someone's been asking a question about this dry index, the shipping index. Folks, I don't know if that index means anything or not anymore, for 2 reasons. One is they don't know exactly how many ships that China has out there. And the second thing is that the largest shipper in China, Hainan, if you've ever been to Hong Kong, you cannot miss those Hainan, those containers. They're everywhere. I mean, because Hong Kong's surrounded by water, and you see these everywhere, and that firm went bankrupt. And, you know, so we really don't know if that dry index, means anything. It used to be a good barometer of the market, of shipping and stuff like that, but frankly, it doesn't seem to be that good anymore. But I haven't looked at the index for quite some time. I know it's near its all-time low, as I recall, but I don't know if you could really do much with that as far as making any analysis. And it's relatively thinly traded too, as I recall. Let's take a quick look here at this wheat market, because I think it's an interesting one here to look at. It's the Baltic Dry Index. Yes, that's correct. And it is off the lows. You hold on. Yeah, they've widened the Panama Canal, and I think they're doing something else down there. Someone's building another one or something, another way to get through. But if we look at the wheat here, look at the harmony in the wheat market, folks. Those blue lines that you see, those dark blue lines, those are just perfectly equal symmetrical moves. That's what they are. Those lower tops, right, coming exactly 14 days, 28 days apart. And, those are the ones that you try to look at. Now, sometimes you'll put your order in and not get filled, but you got to be just a little flexible on your orders, because that's one of the things that you've got to be able to do, is to be filled when you get these things, because if they don't get filled, you don't make any money. Be right back. I want to talk about copper.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hey, we're back, folks, and I wanted to give a little chat here about the copper. We were talking about markets that go straight up. As you can see here, last Friday we went from, we're beeping again. Just give me 1 second here. I want to be able to see what's going on here. Hold on a second. It's, well, the gold hasn't made new lows yet. Let's see what else the other one could be. Give me a second. Something's beeping. Hold on. Well, DAX, what is it? Oh, well, I'm not going to worry about it. Okay, let's move on here to the next one here, and hold on a second. We'll be right back. All right, let's take a look at copper. As you can see, it went straight up and straight down last Friday. I believe it was Friday, and we were up 30 cents, and it went all the way back down to just be slightly up on the day, and then proceeded to go lower. This past rally back that we had was an exact 50% retracement of you know, what we're looking at. So that's another one that looks very, very interesting. Now, I wanted to talk just a little bit about the old days at Drexel Burnham Lambert. I've had several requests to talk about old stories, but folks, when I worked at Drexel back from 1976 to 1982, it was a boutique firm in Beverly Hills. There were in the downstairs section where the retail was. That wasn't floors 2, 3, and 4 were all Mike Milken's junk bond department. But on the ground floor, we had 23 brokers. We had, of those 23 brokers, there were 19 Jewish brokers, one Chinese lady, Adora Chan, who was Buddhist, and then Jim Twentyman, myself, and one other guy, Ernie, was also working for me. So we had 3 people in the commodity department. But during the month of November and December, Drexel spent a lot of time with charity folks. They were really big into giving things away, homeless people, turkeys. I mean, they were always doing something, and you were required. You know, it wasn't a requirement, but you were highly suggested to give, you know, a great deal of your income that you made during the year to the, you know, to the people that were really, really in need. I've always believed in that, but to see a firm that did that, it was really quite good. And Mike Milken, even though he had a lot of bad raps, he was a very generous person. But, you know, when you got $1 billion, you know, it's pretty easy to be generous, but he was very generous anyway. But anyway, it was fun to do that. But I was visiting my daughters this weekend in California, and my oldest daughter reminded me of how much fun that they had when we used to go to the Christmas parties at Drexel, where they'd have the big trees and everything, and we would have the bar mitzvahs and bat mitzvahs parties with the giant shrimp bowls. And it was usually held at the Bel Air Country Club, or the Riviera Country Club, or the Beverly Hills Country Club, and she remembered those days, you know, quite vividly, and it was fun. But just remember, folks, during the holidays, and we've got a big one coming up tomorrow, try to help somebody that's really really needs it. Here in Tucson, we have a gospel mission here, and it's run by Spike Lee's brother. And he's a really nice fellow, and they've just done an incredible job. They have a men's division, a women's divisions, and a families divisions to help you know, broken families and stuff. And 92% of all the money that you give goes directly to help the people. And it's really when you see what these people go through, folks, you cannot help but feel very, very lucky. So just look around. You know, you got it pretty nice, especially here for the TFNN family. So try to do a little bit of goodwill over the holidays. Now I'm going to get off my soapbox and get back onto the markets again, because I've had another question about one of the markets, and that is the oil market. I still think, you know, we had that Gartley form in the oil at the 49 level. It was spot on perfect. If we come down to the 46.50 level, that also would be a 61% retracement off the last low, and that would be another interesting one, you know, to take a look at too, because these are the things that you've got to, you know, sort of focus on as you're trying to pick out a couple of dollars here to make here and there. We're going to see some tremendous volatility, I believe. We haven't seen much other than the election night that happened in about a 4-hour period. But since that time, you know, things have actually been very, very non-volatile. but I think you're going to start seeing more and more of this as we see the dollar. If it continues the way that it's going, this is going to cause increased thing because, our products are going to be more expensive because it's going to cost more dollars, to do these things, cheaper products abroad. Like Tom O'Brien was saying, pretty soon you're going to be able to fly to London and China for almost nothing because you can go to China now round trip for around $770 from San Francisco and stay at a 4-star hotel, for $55. Okay, let's just take a look here at I wanted to mention someone's had a question here about this U.S. dollar index since we're talking about it. Just to give you an idea of where we are with major support, I want to do this again. You notice that we are up in this area of the 61% retracement. I believe we just hit it in the U.S. dollar index. That was one of the beepers going off at this 101.80 level. So we'll see if that's going to be an interesting one. Now, someone's asked a question about this BIBB, which is Biogen. It's down 5%. Eli Lilly is down 13%. Juno Therapeutics is down 29%. And these are all these high-tech medical things. And boy, when those crash, they really get hit badly. And I still believe that there's got to be some people that at the SEC looking at the options trading that goes on during these times, because if you see a large block option trade for puts right before these reports come out, that somebody has got the thing information beforehand, which is also known as insider trading. So that's pretty much it. Hard to believe this is the last day of the week. I mean, this is holy cow, very, very interesting to see the markets doing what they're doing. But I think the key thing today is watch that IWM up here at this 1.618 expansion, because that's an area that should give it a great deal of problems as far as resistance. That's what I would think, but we'll have to wait and see. Yes. Yeah, I worked at Lilly for 11 years. I had a master's degree in business and a pharmacy degree. It was a great 11 years, but frankly, the last 6, I was so interested in trading that I really didn't have an interest in doing that anymore. I had a real easy job, but it just got to the point that I couldn't afford to work there anymore. So anyway, that's neither here nor there. Those are the old days. These are the new days. What are you going to do? Boy, I can't believe I've been doing it for so long. In fact, 20 and I were talking Saturday that between the two of us, we've been doing this for 110 years. Actually, a little more than that. So it's been I met Jim when we were both in our 20s. So it was a lot of fun. And it's still fun. That's the good part about this is I don't have my daughter asked me again if I would ever retire, and she gave me this. What? So we'll be right back. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Okay, we're back, folks, and we're getting ready to wrap up the show here pretty soon and move on to Thanksgiving. We're still holding the 1189 level in gold, but frankly, it's looking a little bit suspect, but we'll just wait and see, how it turns out. This dollar yen is really moving, folks. That's the bigger move of all the things. Well, the euro's moved about 80 pips, but the yen has moved even more. So the dollar is strengthening. It's probably getting ready to break out at 102 would be my guess, but we'll watch it. Now, we are forming a 3 drive to a bottom pattern in the Treasury bonds. It's nearly perfect. Let's just double check it here just to get a quick look at it here. Oh boy, this is spot on. So I think you got to take a little bit of a buy here at this 152 level in the bonds. I think it's a nice little 3 drive pattern that looks pretty good. I should be able to post this. Give me 1 second and I should be okay. I know I can do it if I can just do this one time. Since we've got a little break here, we'll take a look at it. But it's got all things necessary to make it look pretty good. So hold on 1 second and I see if I can bring it up here. All I have to do now is find it and then we'll have it. So just give me a second here. Nothing yet. Nah, maybe it's not going to work. Hold out. There it is. Hold on. We found it. Okay, we'll take a look at it here, and we'll see where we are. This is a 3 drive pattern. There's no question about it, but it looks like a good one to me. So whether it's going to do anything or not, we'll wait and see. But below 152, you certainly don't want to. You don't want to do anything with that. That's for sure. It doesn't mean. This is true, Mr. POLR. There's no fault in being wrong. The fault is in staying wrong. That was one of the favorite quotes of Roy Longstreet in his book, Viewpoints of a Commodity Trader. So keep in mind that there's no mistake in being wrong. The mistake is in staying wrong. And that's the difference between a neophyte person and also the professional. The professional usually tries to take care of his mistakes, as quickly as possible. That's the main thing that you've got to try to do. I want to take a look here. Yesterday we were talking about this E-mini S&P up in this area of 2204. The high was 2304.50. The 1.618 expansion of that came in at 2202. That was equivalent to that number that we're looking at in the IWM. So we'll see if that's going to be, much of a move from that level. But that's neither here nor there. We got to be able to take a look at it here because these things move around so much, and it's so influenced by, what's going on political here in the United States that it's quite interesting in itself to watch that. All right. I wanted to mention one other thing. If you're having trouble in your trading, folks, the chances are that it's related to something mental, because 85% of trading is mental. We had Adrienne Togaray on Monday, and I know some of you folks took advantage of it, which I think is really great because she'll get to try to scratch the surface of, what might be causing your problem. You might have something where you're repeating the same errors over and over again, and you don't know why. Or you're not, when you first start your day, you really need to start it with at least a 2-minute meditation of quieting your mind and trying to think of what you're supposed to do. Have your trades planned ahead of time, and try not to get outside that plan. That's where people usually get into trouble. They start over trading and they're making some money, so they'll take a flyer here and a flyer there, and before you know it, the fly is out the window and so's your money. So you got to try to follow the plan that you did for the day, and that's really what you want to do. Now with market conditions, like we had today, gold was ready to break down an hour before we were on the air here, but that's what was happening. It was already starting to break down, and by the time you get here in the morning, it's already down $10, $15 on its way to be down $22. So those are things that sometimes you don't have any control over, but they also are very important things to watch also. So that's the main thing that you got to do, is focus on doing the right thing, and try to keep a calm mind doing this, because if you can do that, you can certainly make it a lot better. Now we have one other pattern that looks really interesting. Hopefully we're going to have Rich Anderson on next week. He's been gone for quite some time, but we've been following this. You'll notice here, this is the December live cattle contract. Look since August, we've had 1, 2, 3, 4 rallies that lasted 12 days each. Exactly 12 days, not 11, not 13, but 12. And yesterday was the 12th day, and so cattle should probably start to move lower. Now it's a day before the holiday. That's it. By one other thing, the holiday, this is the most bullish week of the year usually, and the day before Thanksgiving today and the day after Thanksgiving are two of the most bullish days where the market should close higher. It does about 75% of the time. That doesn't mean it can't go lower and then snap back, or it could be down one day and down the next. But if it's down both Wednesday and Friday, that has very bearish connotations, because that tells you that cyclical factor that is there is no longer there. And remember, Black Friday, as they say now, it really doesn't exist with Amazon and all the online buying and stuff like that. And you can buy anything now that you could buy, on Black Friday already. All the sales have already started. Oh, excuse me. Okay. Oh, one other thing, folks. We have another guest here at the Pesavento household. We had another little rattlesnake, a baby one, when we got home. He was already, we have a little snake trap there, and but he was already, gone. But it's a little scary when you see a snake, because they all have the heads are big as the size of a Volkswagen, and all of them are 65 feet long. So it's pretty. We got a caller from Atlanta. Ed, are you there?
Yeah, I'm looking for a GoPro. How low do you think it can go?
If you go ahead.
No, you go ahead.
No, we're going to come up to a break pretty soon. So you ask what you need to ask, and then I'll answer it after the break.
GoPro.
How's that?
That and
Okay.
I saw two fake prints. I saw two fake prints on gold in June and July of 1160. Is that where you think we're going?
I think we'll break that because I believe the number we're looking at is 1145. That's the big 618 from the low we made back in December.
You think we can go to 800 real quick?
Not real quick, but we could go there because of the fact that rally that we had.
We went from 200 to 8. We went from 200 to 800 in 1987. That's so now we go from 800 to 1600. 50%
Well, don't forget it took it took 22 years to do that. Go from 800 to 200. So I don't think it's going to take that, but
maybe Trump will go on a gold standard.
Well, we're going to blame him for everything else. We might as well blame him for that
he's
too.
a winner.
Don't you think?
He's a winner. We blame Obama for raising $1 trillion of deficit. He's a winner.
Okay, well, you stay into the program here. What I'm going to do is I'll do the G Pro during the break.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we've been asked to take a look at GoPro. This stock made a high back in 2014 at about 97. We've lost 90% of its value now, trading at 968. That should have some type of minor support only because of the fact that it's making a 1.618 expansion of the move during September and October, but it's a much weaker than market stock. I wouldn't touch this. To me, it looks like it's heading towards the same place that WorldCom and some of these other stocks, Sycamore Networks, and what was the other one that Randy went? Global Crossing. A lot of these others are going to do, but anytime a stock gives up 90% of it, it's pretty tough. The only way they can get funds to buy this now is to do a reverse split, because most funds cannot buy stocks under $20 or $30 or $50. So the only way they get any interest in this, and even then I don't think you're going to get much interest, but I had seen no reason to be a buyer of anything like this at this level. I mean, to go from 97 to the low was 8, so it gave back 91% of its value. If it holds here, then sure. If it can hold $9, then you might want to, take a look at it. But right now, I certainly put a recommendation. I don't see any pattern on the dailies or weeklies or anything that would tell you that you would be a buy. The only thing I see is a 1.618 expansion of the low, from high to low over the last weekly time frame that went from September to October. We've made a 1.618 expansion of that, so there is support at $9, and that's all that's there. So anything below $9, you're looking at something that is not going to be very pretty. At least that's the way it looks like it from here in Tucson, Arizona. So I want to finish the show by trying to do something nice for some folks today, or probably over Christmas holidays that have a lot less than you folks. We're blessed here at TFNN because of our fearless leader, Tom O'Brien. I want to wish everybody in the family a wonderful and happy Thanksgiving. May God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.